Hello and welcome back. It's time to buckle up, everyone, because we're about to dive into the latest trends, stats, and charts that are moving the real estate market today. If you're thinking about selling your home or buying a home, look no further. We've got all the insider info you need to make the best decision possible. Plus, a way you can make sure you don't lose any of your hard-earned money. So stay tuned for the next Reno-Sparks Real Estate Market Update, this time for July 2023. Let's get to it. Now, before we do, a couple of housekeeping items. Number one, this is for the Reno-Sparks area only. Does not include Fernley, Fallon, Minden, Gardnerville, Carson City, Dayton, etc. If you do live in those communities, we do have access to information. We sell a lot of homes out in those outer areas as well. So don't hesitate. Reach out, put a comment down below in the comments. We'd be happy to get that information to you. This is for single-family residential properties only, which basically means houses and condos. It does not include apartment buildings and commercial properties, land, lots, etc. So just single-family residential properties. Now, if you'd like more information about your specific property, maybe you're thinking about selling your home and want to know what it's worth, what you can get out of it, or maybe you're thinking about buying a home and just want to make sure you're not going to be overpaying, you can visit our website at forrenohomes.com. Right here, front and center. Just scroll down a bit, and you can see, want to know what your home value is today? Click on that Find Out Now button, enter an address, and we will send you an instant automated report that'll give you a good range on where you might expect it to sell. We'll also send you a more detailed report, and we promise we're not going to spam you and call you like crazy. Just no cost, no obligation, just give you good information so you can make the best decision possible. Now, the main thing that moves the markets in terms of price and value of real estate are interest rates. I think it's for obvious reasons, right? Because the vast majority of people that buy homes have to do so with the use of a mortgage, and most of them use 30-year fixed-rate mortgages. So as mortgage rates fall, prices tend to rise because it's cheaper and cheaper. Your payments get less and less. You can afford more and more. The opposite is true in a rising interest rate environment. But even with rising interest rates, how is that affecting prices? Well, you might be surprised. Stay tuned. But let's look at overall prices. This isn't the Reno-Sparks area. This is nationwide, and you can see we have seen a consistent rise in prices over the last 20 plus years. And you can see interest rates drop for nearly 20 plus years until today, where we see interest rates at right around just under 7%. We're sitting at right around 6.75% as we record this video. So if I put these charts side by side here, you can see interest rates down, prices up. Except this little blip here at the end of 2023, we started to see prices fall. So what does all of this mean for the Reno market? Well, it defies logic, and it does for a few reasons. Because every time you see interest rates rise, you expect prices to potentially fall. Not exactly happening, and I'll share with you why here in just a moment. Before we get to that, though, on these charts, you'll see a couple of different data sets. And first, obviously, being the month of June 2023, even though this is July market update. These are stats through the end of June, but you'll also see here where it says prior period. Now, prior period is actually May 2023. It's the previous month. And when you see same period prior year, that would be June of 2022. So today, or as of the end of June, we're sitting at $575,000 as a median price. Now, Sparks is a little bit lower, Reno's a little bit higher, but overall, $575,000, which is up 4.6% from last month, where we're sitting right at $550,000, and we're down just slightly from last year, where we're sitting at $580,000. And you can see the chart here, consistent climbing of prices here until we peaked out in mid to late 2021, early 2022, and then things fell, where we dropped down to just over $500,000. We're now sitting at $575,000. So you think, well, Ryan, you just told me interest rates rise, prices tend to fall. Well, let's look at the reason prices haven't fallen as much and are starting to rebound. And part of it is the old economics 101, and it's supply and demand. So here's the number of sales, total number of sales for June. There was 484, which is up nearly 6% from last month, but down nearly 6% from the same period last year. Now you can see normally we would see about 450 to 650 in that range. In slow months, in the winter months, we'd see 450, 500. In the summer months, we might see 650, 700, and there's a few anomalies in there, but that's about what we'd expect to see. What you can see here in early 2023 was one of the lowest we had in over 20 years in terms of total number of sales at just barely 250. Starting to see a good rebound, but we'd like to see this number get a little bit higher to more of a seasonal norm of maybe 550, 600. We're not there yet. Now, what I want you to notice here is the majority of sales are taking place, or the closed sales are taking place between 4 and about 600,000. Now, there's quite a few sales, 600,000 to $1 million, but you start to see it fall off after you get above, say, 650 and above. It starts to fall off until you get to the 1.5 million, which makes sense, right? Because as you climb in price, less and less people can afford higher-end homes. Let's look at the active sales. And here's where the issue comes in with supply and demand. Active sales is supply. It's what's on the market today. You can go out and look at these properties, write offers on them, buy them if you want. There's 800 of them out there for sale, which is up almost 2% from last month, but down almost 41% from last year, where we had 1,354. So when you go back to supply and demand, that means supply is extremely low, right? We have very little supply. And you can look at historical supply numbers from the last decade or so. Low would be considered 800, and this is normally, if you look, this is January. Again, January. So usually in the winter months, we see very low supply, which is right around 800. We're now in the middle of the summer months, which are generally our busiest months, and we're just barely getting to a supply of 800. So we did rebound nicely in 2023, given the high interest rates. People held back. You know, we built inventory, and so our supply went up, and then unfortunately people started buying again and our supply went down. Now let's look at active by price. Now if you look at closed by price, I want you to notice this part of the chart. You go active by price, look at this end of the chart, meaning we have very few active inventory in the 4 to 5 and 5 to 6, where most houses are selling. We start to build inventory in the 600, 650 and up. We start building inventory with not as many sales. So prices and the speed at which your home will sell and what will sell for is very much a story of price range here in the Reno-Sparks area. If you're below that 600, 650 range and below, take a look at this. Very low supply, lots of demand. You're probably going to get your home sold in relatively short order. And if you're thinking about buying in that price range, you're probably going to have to pay close to full price. In some cases, believe it or not, over full price. However, when you start getting above 600 plus, it's not the same story. So let's look at new listings. Now, this is the flow of listings that are coming in. These are the listings that came in June. Now, what you're probably saying, what is the difference between active and new? Active are ones that are on the market. They could have been on the market for a couple of weeks, couple of months, even a couple of years. They're just currently on the market for sale. New ones are just ones that came on the market. Some of these might have already sold through, meaning of the 600, there may only be 200 or 300 that are active on the market. So this just gives you a total flow of listings. And right now we're sitting at 616, which is up nearly 1% from last month and down almost 36% from this time last year. So a big drop. Again, new listings is supply. We have very limited supply. Let's look at new listings by price range. Again, you notice this 600 to 700 price range here always sticks out. Lots and lots of new listings, pretty robust sales, but not nearly as many sales as we have listings. So the supply and demand dynamic is a little bit different when you start getting up into higher end price ranges. Now, the last chart I will show you is percentage of cash sales. 27.7% of homes sold cash, which means roughly 73% sold with a mortgage. The historical average is right around 20% of homes sell all cash. A little higher, a little less, but roughly 20% sell all cash. So 80% of homeowners need to get a mortgage. So right now, to sum it all up, interest rates are up, which you'd expect to soften prices. We did see that initially, but demand remains very stable, but supply is the big issue right now. Supply remains extremely low. I would say this, if you're thinking about selling, it's a great time because obviously inventory is low. However, just understand when you get above 600, 650 and above, your home is still most likely going to sell over a period of time, but it may actually take a little bit longer than you might expect because, well, there's a lot of inventory and not quite as much demand with higher interest rates. Now, if you're below that 600 range, you're still going to get some really good activity because there's a lot of demand in that price range and very little inventory. Now, on to what I promised at the beginning, the intro of our market update, and that is how you can save the most amount of money possible. A lot of people don't understand when it comes time to sell your home, there are options out there. You don't have to pay the first real estate agent you see or choose the first agent you see. You don't have to pay 5 and 6% commissions. You can pay a whole lot less and still get all the services you've come to expect from a local, expert real estate agent that can handle everything start to finish. That's what we do here at Assist to Sell. Your home sold by a local expert for only $49.95. And if your home is over that $500,000 mark we spoke about, it's only 1%. So if your home, let's say, is $600,000, it's only $6,000, which is significantly less than what you might expect to pay from another real estate agent at 5-6% or more, which, by the way, is $30,000+ at 6%, $36,000 to be precise. Never pay that much to sell your home. Give us a call at Assist to Sell, 688-6060, area code 775. Visit our website, renohomes.com. Hopefully you got some great information. If we can be of any assistance, don't hesitate to reach out. We'd love to chat with you. We'll see you next time here on the Reno-Sparks Real Estate Market Update. Bye-bye.
Assist to Sell, way smarter.